Hey guys, Akil Stokes here. I want to pop in and give you another one of these trading walkthrough videos. I apologize for having no camera, but I'm already late to recording this and just didn't have time to set things up. But this morning was an interesting day in the market as we saw some massive moves come from all of the yen pairs due to some political stuff that's going on. And there were three yen pairs, or there are three yen pairs that I trade, and three that I had on the radar this morning. And I want to take you through exactly why I chose only one of those opportunities and why I didn't choose the others. And for you guys that were involved in the live room this morning, this would be the Wednesday, January 14th live trading room. This goes hand in hand with kind of our discussion on why we have rules and how our rules give us a clear and cut signal of when to involve ourselves in a trade and when to not. So the first of my yen pairs is going to be the euro yen here. And again, you can see some of the notes still left up from the room, but this massive spike right here around 7 o'clock, that was the big yen reaction that we spoke about this morning. And in this scenario, price action came down to a very nice point. Now, we do have bullish biases on all three of the yen pairs already. We came down to a previous level of structure. RSI went oversold, right? We're checking things off of our checklist. So as price action comes down into this area, I asked myself, okay, well, did we come down into structure? Yes. Did we get confirmation from the RSI? Yes. Okay, what is the most aggressive way that I can get involved in a trade? And that would be with a higher high, higher close. Now, if I look closely, as the day went on, we came down, we started to round off, but I never got a higher high, higher close. So although I would like to be in this trade, I want to be in this trade, I did not get the signal that allows me to be in this trade. So gotta go on to the next opportunity. The next opportunity is going to be on the big brother pound yen, aka the beast. Again, similar situation. We had the big spike this morning. We had an overall runoff or move down here on the pair. And we did get a higher high, higher close. So you're looking at this, you say, hey, Akil, nice high momentum or high momentum-ish relative to what we had. Bearish candle there. Nice indecision candle here. Higher high, higher close right there. Boom, let's enter the trade. Not so fast, my friends, right? Let's go down to the overall, let's go back, I should say, to the overall premise of the trade. So what we're looking for is we're looking for price action to return to our previous level of structure, right? And although we do so, what happens here? Man, we get a break and a close below. Now, per my rules, a break and a close below structure allows me or means I have to make the prediction that price is likely to continue lower. I can't be in a situation where I'm trading long if my prediction says short, because now in order to be right in my trade, I have to be wrong in my prediction. You see how they don't really line up together? So once again, per my rules, an invalid trading opportunity. So on the first opportunity, we had price come to the level, but didn't have the entry. On this second opportunity, we had price give us the entry, but didn't come to the level or came to the level and violate the level. We have one more yen pair in my arsenal, and that's going to be good old dollar yen. So same situation. I'm trying to rush through this video. We got Chelsea and Arsenal starting soon, and I really want to see it. But we came down, spiked down this morning, corrected ourselves, and came down again. So once again, let's draw out our level. We had our nice ascending triangle, my favorite breakout pattern, by the way, if you guys are interested. We have our previous level of structure that we're looking for right here. Okay, well, did price come to structure? Yes. Did RSI go oversold? Yes. Did we get higher high, higher close entry reason? Yes. Boom. This one checks all the boxes. Akil is in, and I'm going to stop looking at it because I jinx it whenever I look at a price chart. But I thought this was a cool opportunity to explain to you guys just why rules-based trading matters. I doubt I'll throw in the whole conversation we had in the live room because it was an hour long and it was like cringy because I was really getting after this trader like, show me your rules, right? But this is a great opportunity or example to show you guys three very similar trading opportunities and how or I guess the reason I was able to choose, if you want to call it a choice, the one that I traded in wasn't because of I felt a certain way about it, or it looked the best, or it smelt the best, or it talked to me and told me in these weird promises that it was going to go long. No, it is the only one where all of my rules were met 100% fully, if those are the words that I want to say. Anyway, what I'll try to do is I'll try to come back if this trade progresses real quick, and this probably doesn't matter to you now because you're going to be seeing this after the trade is completed, but a secondary reason for entry would be a retest of the structure. We would call this a double bottom. I would assume this would also come with divergence on the RSI, meaning equal lows. If we get the double bottom with higher lows here on the RSI, that would be a positive sign as well. But we'll track it and see if it happens. And again, you're using this for educational purposes, not signal servicey purposes anyway. So this type of strategy or secondary entry technique could be helpful for the next time we see this opportunity. All right, it's game time. I gotta go. I'll see you guys whenever I come back and edit this thing. We had a cool situation yesterday, and I may or may not make this into like a YouTube video or something like that, where we had 3 different pairs taking very similar actions, but having very different results. So you guys know yesterday, we saw those weird, wacky moves in the end. Again, there's this verbal sparring with the intervention. They are still, this is not anything new, but desperately trying to strengthen their currency, and it's been failing forever. There's also been some political stuff that's been happening as well, which is kind of working into that. But long story short, we saw some weird moves in the market yesterday. We saw those weird candle spikes, right? This one right here. And not only did they get corrected right away, but then they got recorrected as the day went down. And you remember on the pound yen, on the dollar yen, and the euro yen, we had price crashing down into those zones. And the interesting situation was this. So on the euro yen, right, and this is the trade that's on my radar for today, we came down into our level of structure, but never gave an entry reason. On the pound yen, we came down into our level of structure, broke and closed below it, so violating that level, meaning, you know, we had an entry reason, but it never would have been an entry reason because it was never a valid trading opportunity. And then we had the dollar yen, which we're going to take a look at really, really quickly because I'm in it, and I just shared with you the podcast about how I despise looking at open trades. That came down, gave us an entry reason, bounced up, and now it's consolidating. Let's get away from that. I swear, guys, it's a jinx, right? When I look at a trade that I'm in, especially if it's in profit, you know what it does? It goes right back down into the negative. So let's just not look at that. But I thought pound yen would be a cool example because this is an opportunity, rules based, going off of our somewhat awkward conversation yesterday, rules based way to get into an invalid trade. Ooh, that's like a cool YouTube title, a cool way to enter an invalid trade, right? So here's what I mean. So let's say you were someone, and let's assume that you are working under the premise that you want to be long pound yen. If you don't want to be long pound yen, none of this matters, and there's another trading opportunity we can look at as well. But let's work under the premise that you want to be long pound yen, and you're waiting for a pullback into this zone. Well, what happened right here? Who can tell me as I zoom in my chats? What can happen right here? What happened right here? That candle. It violated, right? It broke and closed below. So if we break and close, if we're looking for structure to be the holding point of our trade, and if we break and close below structure, well, that changes things, right? A break and close below structure means that structure didn't hold. If structure did not hold, that blows up our entire trading opportunity of looking for a buying opportunity after a hold of structure, right? Therefore, this 3-bar reversal is irrelevant. So we had that violation. We're crying. We're mad. We didn't get a chance to do it. But then we come back for a secondary reason for entry, a double bottom. What do you guys think about that? Huh? Double bottom? Excuse to get involved in the trade? Huh? No? Anybody? Huh? Always says not good? No? Someone? Oh, double bottom? Amon says, yeah. Ooh, we got 1 versus 1. Oh, no. Mo says no. 2 versus 1. 2 no's, 1 yeah. Anyone? Any brave yeahs out there? Yeah. Still invalid. Because did that double bottom change anything about the original violation of structure? No. Right? Nothing changed. Price still violated structure. So a double bottom, it's not really a double bottom because it's after we violated structure. It's below. It's irrelevant. Right? If anything, it's like, oh man, yeah, that's what we would expect in a trend continuation trade, right? Price action breaking and closing below, price action retracing, and then price action extending down. That's exactly, yeah, it is a pretty double bottom, yeah, but don't let that fool you, right? This is no different than that very beautiful person in the bar that is secretly an alien is going to take you home and eat your face. No? No one? Never been there? Okay. I mean, happened to me before, you know. One too many Long Island iced teas and weird stuff starts happening. But yeah, but this is perfect. Because yeah, it's a beautiful looking double bottom, but this goes back to our conversation. What versus where? Which is more important? The what versus the where. The what is the thing, the where is the location, right? The where is more important. A double bottom that violates the whole premise of your trade. And this is why the process, I know you get sick of hearing me talk about the process, but this is why the process is so important. IPDE, right? If the double bottom is what we're looking for to get involved in the trade, if we're following the process, we never actually get there. We identify, break and close below structure, and then all of a sudden, boom, our prediction is shifted. We never get to the point where we're looking to buy a double bottom because we're stopped, we're blocked at the part of the process. And again, if you guys aren't following this process, please do. It is a fail safe. It is meant to stop you from doing dumb stuff. Believe it or not, I had a situation yesterday. My kid plays basketball, and I guess the normal person that sets up like the kiddie courts, they have these extenders that is pretty much like a basketball court, like the backboard and rim that you put over the real basketball court, and it hangs lower. And usually it's done for us, but I guess the guy was away. So me and one of the coaches were trying to figure it out. And typical man, right? I'm not reading no instructions. I'm just like moving stuff and fiddling with stuff and like pretty much, right? I have to lift this thing 10 feet in the air over my head and hope it latches and doesn't fall on my head and kill me. So if I'm not following the process correctly and I don't latch it the right way, which may or may not have happened, I could have died. That means no live room today, right? But luckily, my friend who is a coach, she was like, stop, Akil, let's read the instructions and figure it out. And we read the instructions and we did it step by step and I did not die, right? So what I was planning on doing would have ended in me dying. What I ended up doing, because I had a process, ended up in me surviving. That's why the process is important. So the next part of this, right? So we don't have a double bottom. So no trade here. But what happens here is this. We come down, violate, come back up, come back down, and then we reviolate this level right here, right? So this gives you a 26.18 opportunity. Now, if you're interested in taking the 26.18 opportunity, this would be an excuse to get back involved because now we took out these highs again. Now, obviously the 26.18 didn't end up playing out as we're trading below, but at the time, if you were looking for an excuse to get involved in this trade, you couldn't do so at the double bottom, but if you wanted to, you can wait for a reviolation of these highs, which actually was here because of this wiki candle, and then a chance to get involved. Now, another lesson. Two ways, well, many ways. Well, let's talk about two ways to trade at 26.18. We following up on our Monday Q&A session. One way, right, or both ways, we're taking our Fibonacci retracement from the low to the high, right? One way is putting an aggressive order right on the 618 and saying, if price gets here, I buy. Now, who can tell me the pros of taking this approach? What is this? How can this benefit you as a trader? aggressive limit order. I'll write this down. This would be a buy limit order, which means as soon as price hits that level, bang, you're to the upside. Now, what's the benefit of this? Yeah, you're in the, I wouldn't say catch the whole move, right? But you're in the trade right away. Right? So not necessarily catching the whole move, but like what you're saying, you're in the trade right away. As soon as it hits, boom, you're aggressive. You're in the trade. The second way of getting involved is using this as a kill zone. I didn't mean to do that. I was trying to pause and not say it the right way, so a kill zone sounds like a kill zone in my name and stuff like that. But it happened. It's natural. I'm sorry. Where you look for price action to enter this zone, right? The zone between the 618 and the low of your double bottom, or the right low of your double bottom. And then you say, you wait for your reason for entry, just as you would have structured. You say, if price action enters that zone, then I look for insert entry reason. So if your entry reason is a higher high, higher close, which is something I was personally looking for, did we ever get that entry reason? Did we get a higher high, higher close there? You can also go down to a lower time frame if you want to, if it's in your rules, obviously. No. Well, never entered the trade. Now, I don't know if this is going to hold or if this is going to break through and violate, but again, going on, following the process that we laid out for ourselves might have kept me out of it would have been a bad trade no matter what because I wouldn't break the rules, but might have kept me out of a losing trade. Waiting for that confirmation. Again, we don't know what's going to happen. This thing can pin bar and reverse back up. Secretly, I hope that's the case because I'm assuming all these end pairs are going to move the same. And again, I need bullish action on that dollar again. But yeah, a good example of that. So it's lots of lessons in here. One, the importance of the what versus the where, violation of structure. Two, having a rules-based secondary reason to get involved in a move. So not just doing it to do it, but saying, okay, I wanted to enter that higher high, higher close, couldn't do it. Man, I would love to enter a double bottom, but man, couldn't do it. Is there another way that I can get involved? Okay, 26.18. Maybe that's my third and last chance to take a shot at this thing. Then after that, I don't know what to tell you. I don't know what to tell you. Just right click, erase. That's step number 4. All right. Ali says, are you able to trade a 26.18 in a way like that even when the double bottom was violating structure? I understand that it's structure-based setup, but as a 26.18, would you still have it as a tradable 26.18? Yeah, certainly. Yep. Certainly a tradable 26.18. Yep. Because this is in a consolidative state. Yep. So even though we have that violation, once we take out the highs again, now we're back in that consolidation. Now, if we never took out the highs, we would never be in a 26.18. But if we never took out these highs, then no, I don't see any way. So this is very similar to, I don't want to go there yet, but Euro Yen, who is doing this sideways channel. And you guys already know how I like to trade these sideways channels. I love these things, right? It makes it, we'll revisit this in more detail later, but it makes it very easy. Because I just need to draw a line at the top. I just need to draw a line at the bottom. And I just need to wait for the market to tell me which way you're going, right? So, but let's go to pound yen, because this does offer another opportunity, right? Again, despite all that 26.18 talk and all that failedness and whatever of getting long, fact of the matter is, we broke and closed below structure. We consolidated, we broke out to the upside, but now it looks as if, and we got 45 minutes left. I shouldn't say it looks as if. So let's talk about another opportunity. If we end up breaking and closing again below this new low, then just as this reset our prediction and this reset our prediction, this will also reset our prediction, right? This is why you gotta be fluid as a trader. You can't get stuck and be stubborn in your ideas. We gotta be mercenaries. We gotta be able to sign up for whatever mission pays us the most money. We could be protecting someone one day, and then that new paycheck comes in, and all of a sudden we gotta assassinate them. That is us as traders, right? I have no allegiance to bullish or bearishness. My only allegiance is to the American dollar. Unless it's weak, then gold. Then gold. That's actually always gold. So let's ask ourselves this question. If price action continues lower, if we violate this level, and we can predict that price action is likely to continue lower, any ideas on where price action is likely to continue lower too? Is there room to make a tradable trade out of this? I can bounce you to the 4-hour real quick if you want a better idea. Ali says, so 2618 opens up a lot of otherwise non-tradable double tops and double bottom opportunities for you. Yes, yeah. So 2618 is think about it as a secondary reason to get into a double top or double bottom. So if you have an invalid double top or double bottom, a 2618 is an easy excuse to get involved in that trade. Yeah. Aman says 212 even. Let's get some lines here. 212 even, nice even handled number. 211 half, says Mo, right down here. Anything else? I like what you guys are thinking, right? You're pretty much looking at a retest of this structure level right here. All right. Well, how about we do some things here? We do some things, right? Let's bring in some fibs, let's bring in some volume, see if we can kind of see any clues. Fibonacci retracement tool, swing low to swing high. We've got a 50% hovering a little bit above it. We have a 618 right at about 211.80, so right underneath that 212 even handle. Let's bring in some volume here as well. I'm going to take our whole swing here, see what's happening. We've got little spikes, 212.28. A little bit of a bigger spike right at our 618. So 618 seems to be the biggest volume spike right now. I'm just curious where, if I can take a Fibonacci, I'm gonna erase. It's too crowded in here. Just curious of this last swing right here, swing high to swing low with the Fibonacci. Where would this put us? Nothing really, yeah. So I like the 212 level. I like this level 211.80, but I think if you're at 211.80, you might as well go to 212 even, just to be a little bit safer. So I do like that 212 level. It's difficult to see, but AB equals CD pattern as well. That's going to put us right down about 211.80, yeah, right around that 618. So you do have a lot. You do have a lot of confluence at that 618 level. You guys know me. I'm just a scaredy cat, man. I'd rather look for the safest area. But I'll draw the line. 211.80s to 212, 211.70 is to say to 212. That's a good little zone right here to look for. So if we violate, and if we get a pullback, or if you're a breakout trader, just trade the break, right? Then we could look for a move down to that level. So if you are an intraday trader, this is an hourly chart, so kind of a short-term intraday trader, this is an opportunity. More shall even open up on a day trading opportunity, right? Again, it's going to be much easier to see that retracement, to see the zone that retracement has to come to, and take advantage of this on a 15-minute chart, maybe a 5-minute chart, maybe a range bar chart. Let's go down to a range bar chart real quick. I'll start with a 13. That's going to be equivalent of about the 50. Well, yeah, but let me see. Just curious what an hourly would look like. What's an hourly? 26. Yeah. What's the closest number to 26, guys? 20. That's going to be 21, right? It's going to have to be 21, yeah. I meant closest fib number, sorry. So here's what pretty much probably a little less than an hourly chart would look like on the range bar chart, equivalent. A 13 would be more equivalent to the 15-minute chart. And what I'm doing is I'm taking the ATR from that minute chart and just putting it into a range bar chart. But I like sticking to fib numbers because I'm weird and superstitious, so I'm adjusting it to the closest fib number. But yeah, track this thing on a range bar chart, track this thing on a 15-minute chart, and see if there's an opportunity. I'm gonna get this into our pro trade log real quick, and let me know if you guys have any questions about it. We'll go to Euro Yen next. All right, I want to come back one more time before I get ready to post this video and just give you a little bit of an update on the trading ideas that we had. We'll start with the pound yen. You can see that price action did rally down, and look at that. It came exactly to that 212 even handle. Remember, we were having a discussion in the live room about should we look at 212 or is there a little bit of a better level down at 211.80s? And I don't know if this is going to stay here, but whenever you hear us talk about psychological numbers, we're not just saying that for no reason. Psychological numbers really do act like powerful levels of support and resistance, mainly because what you see on the price chart is nothing more than a visual representation of what all of us are doing in our buying and selling habits. And as human beings, we like psychological numbers. They come very easy to us. So numbers that end in 00, 5 zeros, 2 5s, stuff like that. So me personally, whenever I can, right, if there's a debate, I would rather have my take profit level at the psychological number versus the number right below the psychological number. And that's a tip that has helped me, I learned that the hard way, but it's helped me make a lot more money in my trades and have a lot less kind of sadness from watching trades go in my direction, only to bounce back before they get to my profit. Now, the bad part is there was no opportunity to get involved here. From my perspective, someone watching on the hourly, we just had straight reds down there, so no opportunity there. Let's jump to the 15 and let's see. We had a little 3-bar, this is actually a cool little candlestick deal right here, 3 bars inside one engulfing candle, or one big high momentum candle. But that would have been the only opportunity to get involved. But even there, I don't see anything. You get a lower low, lower close, a little bit lower. Maybe if we're reaching here, you can find a trading opportunity where you enter there and stops go above here. But honestly, I don't think you have anything. So this is one of those deals where you have to tap yourself on the back for making a good prediction, but there was no tradable way I see. Let me just check range bars real quick. Range bars sometimes give a different story. Here's a range bar on the 8. Yeah, nothing, or on the 13 range. Let's go down to an 8 range bar chart. Was there any reason to get involved? Yeah, no. Nah, I don't see anything. Again, this level right here would have been the only way, but there's no true pullback in there, so you would have had to been perfect, and that's just not realistic. Maybe those other YouTube channels that tell you how things go exactly perfectly would say yes, but you probably just missed it. Now, as far as our dollar yen trade goes, I am still in this trade, and it is retracing, so again, I don't want to look at it, right? But I can tell you what I have done. I have been able to reduce my stop loss by about half, and that's because of rolling stops. So you guys remember my entry was right here. And after we've achieved that, we've done a few things. So we've flowed up, we've ebbed down, we've kind of flowed up and held. We traded higher than this initial high right here, but we didn't break and close above, and then we pushed down. And then, this is the most important part, we put in a higher high, higher close. So a higher high, higher close, going back to predictions 101, allows me to make the prediction that price is likely to go higher and whatnot. What that means is that if we're likely to go higher, this level right here shouldn't be violated, right? Shouldn't. We're going to see all types of times when it does and price continues up, right? It's the markets. Nothing's perfect, but it shouldn't be higher or shouldn't push lower below that level. So what that means is that I can take my initial stop loss from down here and push it up to about right here. Now, again, it doesn't really seem like too much, but it does take about half of my risk away, and that is important. I'm not sure what podcast we spoke about this in recently, but we always say that good traders are great risk managers, and I actually did a short the other day, or I'll just tell you, good traders are great risk managers, and one of the ways to increase your edge, right? There's 3 ways to increase your edge. You can either win at a higher rate, so increase your win percentage. You can win more when you win, meaning that your targets are kind of maximized a little bit more, or you can lose less when you lose. And active trade management, having a trade management plan, allows you to do that. So instead of taking, let's say, a 2% risk on a trade, if you can reduce it by half, all of a sudden you've taken a 1% risk. And by addition, by subtraction, that allows your next win to kind of make more in comparison because you lost less on the previous loss. It makes sense when you look at all the numbers together. I'm confusing everyone right now because I'm very hungry and I need to eat. But I hope you guys enjoyed the video. Let me know if you like more of these walkthroughs, and I'll give them to you. We do this stuff every day. I just rarely put it up on YouTube. Hit that like button if you did like it. Follow, subscribe if you're not already for more cool content. And until next time, plan your trade your plan. Fingers crossed that this thing rallies up to the highs. If you liked what you saw there and ever want to join us, we have 2 live room sessions daily, a London live room with Jason Greystone and a New York live room with myself. It is part of your 14-day risk-free trial membership on our platform. So just head over to www.tier1trading.com and get started now. It's risk-free because there's no auto bill or sneaky stuff like that. You simply get 14 days on the platform to take some courses, chat with the community, and join our live sessions. Then after that, you're kicked out. So give it a try, www.tier1trading.com.